Question: from the following balance sheet and information of Light Limited, prepare cash flow statement. Equities and liabilities, shareholders funds, share capital 4,50,000, 5 lakhs. Reserves and surplus 2,50,000, 1 lakh. Non-current liabilities, long-term borrowings 10% debentures 2 lakhs, 1 lakh. Current liabilities, trade payable 1,33,000, 46,000. Other current liabilities 5,000, 10,000. Short-term provisions 12,000, 24,000. Balance sheet total 10,55,000, 7,80,000. Assets, non-current assets, fixed assets 6,20,000, 5,10,000. 10% investment 80,000, 30,000. Current assets, current investments 10,000, 8,000. Inventories 90,000, 1 lakh. Trade receivables 1,85,000, 90,000. Cash and cash equivalents 70,000, 42,000. Notes to accounts: share capital, equity share capital 3,50,000, 3 lakh. 12% preference share capital 1 lakh, 2 lakh. Reserves and surplus, securities premium reserve 5,000, current year 5,000, previous year 0. Balance in statement of profit and loss 2,50,000, 1 lakh. Other current liabilities, premium on redemption of preference shares 5,000, 10,000. Trade receivables, sundry debtors 2 lakh, 1 lakh. Provision for doubtful debts 15,000, 10,000. Additional information: a machine with a book value of rupees 40,000 was sold for rupees 25,000. A machine with book value of rupees 40,000 was sold for rupees 25,000. Loss on sale of machine rupees 15,000. In this case, loss on sale of machine rupees 15,000. Book value of assets or value of assets sold is rupees 40,000. Sales price 25,000. So, loss on sale rupees 15,000. Depreciation charged during the year rupees 70,000. Preference shares were redeemed on 31st December 2018 at a premium of 5%. Preference share capital 12% preference share capital. Notes to accounts: first number share capital, under share capital, second item 12% preference share capital. Previous year's amount 2 lakh, current year's amount 1 lakh. Preference shares reduced by rupees 1 lakh. Reduction in value of preference shares shows redemption of debentures. Amount of debentures, redemption of preference shares. Amount of preference shares redeemed during the year is rupees 1 lakh. Previous year's amount 2 lakh, current year's amount 1 lakh. Amount redeemed during the year rupees 1 lakh. These shares were redeemed at a premium of 5%. So, amount of premium paid is, or amount of premium payable or paid during the year is 1 lakh into 5 by 100. 1 lakh is the amount of shares redeemed during the year and 5% is the premium on redemption. 2 lakh minus 1 lakh, rupees 1 lakh is the amount of shares redeemed during the year. Premium payable is 1 lakh into 5 by 100. Premium on redemption is the extra amount paid or payable on redemption of shares and debentures. In this case, amount of preference shares redeemed is rupees 1 lakh. Premium 5%. 5% of 1 lakh rupees 5,000 is the premium on redemption. Then securities premium reserve rupees 5,000 is given. That securities premium is the extra amount receivable on issue of shares. Securities premium is an inflow of cash and Premium on redemption is an outflow of cash. Premium on redemption is the extra amount paid on redemption of debentures. It is an outflow. Securities premium is the extra amount receivable on issue of shares or received on issue of shares. That is an inflow. Then second adjustment, depreciation charge during the year was 70,000. Preference shares were redeemed on 31st December 2018 at a premium of 5%. An interim dividend at the rate 15% was paid on equity shares on 31st January 2019. Equity shares 3 lakh and 3 lakh 50,000. Previous year's amount 3 lakh. Current year's amount is 3 lakh 50,000. Shares, equity shares issued during the year is rupees 50,000. Date of issue is given last adjustment 31st March 2019. Dividend payable on equity shares or dividend paid on equity shares is rupees. Interim dividend paid on equity shares is 3 lakh into 15 by 100 because the fresh issue was made on 31st March 2019 only. So, the interim dividend payable on equity shares is calculated on the basis of previous year's amount which is rupees 3 lakh. 3 lakh into 15 by 100. Then next adjustment, dividend at the rate 12% was proposed on preference shares for the years entered 31st March 2019 and 31st March 2018. Proposed dividend 12% is calculated on the basis of previous year's amount. Previous year's amount is 2 lakh. Previous year's amount 2 lakhs. Notes to accounts. First, note number 1, equity share capital and preference share capital. Preference share capital 2 lakh, 1 lakh. Proposed dividend is calculated on the basis of previous year's amount, that is 2 lakh into 12 by 100. Cash flow statement, closing balance of surplus, that is the difference of a statement of profit and loss, 2 lakh 50,000 and 1 lakh, rupees 1 lakh 50,000. Provision for taxation, previous year's amount 24,000, current year's amount 12,000. Provision for tax 12,000 is added to the profit. Then preference dividend of previous year 24,000, interim dividend of 45,000, that is 3 lakh into 15 by 100. 24,000 is the proposed dividend of previous year, which is calculated on the basis of previous year's preference share capital. Previous year's preference share capital is 2 lakh. 2 lakh into 12 by 100, 24,000. Interim dividend 3 lakh is the previous year's amount. 15% is the rate of dividend. 3 lakh into 15 by 100, 45,000. Net profit before tax and extraordinary items 2 lakh 31,000. Next, items added, depreciation. Depreciation is given, that is 70,000. Adjustment number 2, 70,000. Then provision for doubtful debts. Notes to accounts. Note number 4, trade receivable under trade receivable. Second item, provision for doubtful debts. Previous year's amount 10,000. Current year's amount 15,000. That means provision increased by rupees 5,000. Increase in provision added to net profit before tax and extraordinary items. Next, interest on long-term borrowings, that is interest on debentures. Interest on debentures, interest payable 10%. Previous year's amount 10,000. Interest is 10% of 1 lakh, rupees 10,000. Loss on sale of machinery 15,000. Adjustment number 1. Machinery of book value 40,000 was sold for rupees 25,000. Loss on sale 15,000 is added. Then non-operating incomes, interest on investment. 10% investment is given, that is 30,000 and 80,000. Interest is calculated on the basis of previous year's amount. Previous year's amount is 30,000. 30,000 into 10 by 100, 3,000. Operating profit before working capital changes after all adjustments, rupees 3,28,000. Next, adjustment for working capital, decrease in inventory 10,000, increase in trade payable 87,000. Then increase in trade receivable 1 lakh. Amount after adjustment 3,25,000 is cash generated from operations. Next, income tax paid. Cash from operating activity rupees 3,01,000. Next, investing activity. Investing activity, sale of fixed asset 2,20,000. Purchase of fixed assets 2,20,000. Sale of machinery 25,000. Interest on investment 3,000. Purchase of investment 50,000. Purchase of fixed asset and purchase of investments are outflows of cash. And interest on investment, interest received on investment and sale of machinery, proceeds from sale of machinery are inflows of cash. Net amount after adjustment is rupees 2,42,000, that is the cash used in investing activity. Next, cash from financing activity, issue of equity shares 50,000. Equity shares previous year's amount 3 lakh. Current year's amount 3,50,000. That means equity shares of rupees 50,000 were issued during the year. Issue of equity shares rupees 50,000 is an inflow. Then premium received on equity shares rupees 5,000. Last adjustment, fresh equity shares were issued at a premium of 10%. Amount of equity shares issued during the year is rupees 50,000. Previous year's amount 3 lakh, current year's amount 3,50,000. Shares issued during the year is rupees 50,000. Equity shares were issued at a premium of 10%. Amount received as premium is rupees 50,000 into 10 by 100, 5,000. Notes to accounts, note number 2. Reserves and surplus securities premium reserve rupees 5,000. That reserve is the premium received on the issue of equity shares of rupees 50,000. Then proceeds from long-term borrowings, debentures issued rupees 1 lakh. Redemption of preference shares rupees 1 lakh. Preference shares of rupees 1 lakh were redeemed during the year. Redemption of debentures, outflow of cash. Premium on redemption of preference shares rupees 5,000. Premium on redemption is an outflow of cash. Securities premium is an inflow of cash. Securities premium is the extra amount received on the issue of shares. Inflow. Premium on redemption is the extra amount paid or payable on the redemption of shares and debentures. Premium on redemption. That is an outflow of cash. Interest on long-term borrowings 10,000. That is the interest on debentures. Interim dividend paid 45,000. Preference dividend paid 24,000. Cash used in financing activity 29,000. Net increase in cash and cash equivalents 30,000. Cash and cash equivalents in the beginning 50,000. Cash and cash equivalents at the end 80,000.